Hello, ladies and gentlemen. Good day and welcome to the show on this Wednesday, the 17th of June, 2020. Listen, I'm glad to have you guys here. Now, here's the thing. India and China have a little border clash, and 20 were killed during the border clash. But let's open the charts up right here and take a look. It says that India's Prime Minister Narendra Modi breaks silence after deadly border skirmish with China. And here's what they're saying. China and India agree to resolve border clash in a fair way, to de-escalate as soon as possible. And that's from the Chinese foreign minister. I'll tell you what, it's kind of like this kind of thing's been going, it has been, this is the worst it's been for a while, but it's an ongoing border dispute. And the reason why I didn't report on it yesterday, I was covering the story over in the Korea, South and North Korea, is because the way I see it, the situation is much more, how would I put it? It's much more likely to develop into something bigger in Korea, what's going on in Korea, than what I see in India and China right now. And the reason why is they're not even, in India and China here, they're not even fighting with guns and bullets or anything like that. They're fighting with sticks and clubs and stones, so it's probably not going to, and because of those reasons, they're doing that on purpose. It's not like they don't have bigger weapons to use. They're not using them. This is more like a back and forth thing that's been going on for a long time, these border disputes over this region in India and in China. Whereas Korea, totally different situation. We're talking about a thermonuclear power here in North Korea. South Korea's got a tremendous force too, and they're in that region of the. Anyway, its potential is much worse. Now, talking about warfare, I'm going to extend this talk a little bit more, and I'm going to talk about the ongoing trade war between the United States and China. This is the biggest war that's ongoing in the world right now. It hasn't ended, and everything that you see, all these progressive events that you see that has happened to your lives, I mean, it's touched your lives and touched your lives hard in the past few months. Everything is directly or indirectly connected with this trade war that's going on between the United States and China. And it's having a tremendous effect of tearing the world's economies to pieces at this point. Now, if you wanted to try to call a winner, in this, there is no winner. It's loser-loser, both losing. But the United States, just a week or two ago, their cities were on fire, and what we were looking at is a situation that could have escalated out of control. It didn't, thankfully. We're having to wait and see what's going to happen in the near future with this, but I'm going to tell you what it all really comes down to, what it all really boils down to, who's going to be the winner in all this, is a country that can keep their economy going the best. And in order to do that, it has to be the country that can print the most money and keep their citizens happy and keep their citizens from revolting, from going into civil unrest and stuff like that. The country that can print the most money and get away with printing the most money. Money is the key to this. Money is what's going to hold things together and keep things from completely. And when I talk about, actually, it's not money. I'm saying money. That's because I've been trained to say money. It's actually currency. Whatever country can print the most currency. But in doing so, the currencies are going to be destroyed in this. This is a race to the bottom. The way they see it, the more of this currency they print, the cheaper their goods and products and goods are, because they devalue their currency. That means that they're going to get more trade because they got cheaper goods. That's the way they see it. It doesn't really make any sense, but it's a race to the bottom for the currencies. And honest to gosh, Jim Rickards, he wrote those books. those books he wrote were absolutely prophetic. Even the names of the books, Currency Wars, absolutely prophetic. Anyway, we're moving on here. We got the charts open, and now what we're gonna do is take a look at the gold price today. We're looking at 17.24. It's down $1.90. But I'm going to tell you, it's right smack dab in the middle of its range. Its range, the center of its range is 17.25. And so it's at 17.24.20. Let's take a look at silver today. Silver's up today 8 cents. It's at 17.49. And the center of silver's range is at 17.40. So silver is on the high side of its range right now. And, cryptocurrency, gold and silver, they all been following a very narrow trading range lately. Not really moving too much to the upside or to the downside. Had a few dips, but let's take a look at cryptocurrency today. $267.5 billion for the industry, 64.9% Bitcoin dominance, and a Bitcoin price of $94.38 on the day so far. Okay, the Dow Jones. Well, it was in the red. What is the price of the Dow? 26,291. It's only up very, very marginally. It's up 1.98 points, almost nothing. 26,291 on the day. I'm thinking it could go into the negative later today. I expected it to go into the negative yesterday, but it held up. The Dow Jones, is completely overinflated, but we got a war going on right now in the sense that deflation and inflation, which is going to win. I know which one's going to win in the end. It's going to be inflation. But deflation right now is putting its bid in. It's doing its part, deflation, and that's the only thing that's helping to keep prices down with the amount of money that the Fed's printing. Is this nominal deflation that's going through the system with a lot of people losing their jobs? That's deflationary. A lot of businesses going out of business, it's tremendously deflationary. And then on the other side of that coin, you got the Fed pumping money out like mad. They're running the printing press at full speed. That's inflationary. So you get these two forces fighting against each other. Inflation's going to win in the end because they can't let the deflationary shock has mostly played itself out now. Most of the people have all lost their jobs already. Over 40 million Americans have lost their jobs. I wouldn't be a bit surprised if a few of those jobs actually come back. And so we've seen the profound effects of deflation. And where have prices go? They haven't went down. Consumer price inflation has not went down. It's not went deflationary with all this deflation that we've had. And that's because of the amount of money that they've been pumping into the system. If the Fed hadn't been pumping all that money into the system would have completely deflated. Prices would have fell on a lot of items. And we would have been in some serious deflation right now. We would have been in, I think an awful lot of banks would have failed. I think a lot more businesses would have failed. In fact, the whole system might have shut down and locked up. It might have been, the deflation might have been that bad if the Fed hadn't have printed all that money. But by printing all that money, injecting those $1,200 stimulus checks in and paying people $600 a week extra on their unemployment benefits and all of this extra stimulus money floating around the system chasing goods and services has helped keep prices from falling. So you got these two forces fighting against each other. Ultimately, the Fed's going to win in the end because they've already told you. They've said, we have unlimited resources to print money. We can print as much money as is needed. Okay, let's take a look now at crude oil. $38. It's down 38 cents on the day, or basically 1%. Take a look at U.S. Treasuries. And we're seeing Treasury yields falling all the way across the board, but it's not substantial today. The largest fall in the yields is at the 7-year at 1.4 basis points. The 10-year is 1.3 basis points fall in yield, and we're looking at 0.74 and the 30-year is 1.53. Okay, the U.S. dollar index, 97.28, and the dollar's riding kind of strong. See, the only reason the dollar is anyway strong at all is one that's being what is being pegged against the euro. You know, and you want to talk about this dollar milkshake? Well, when the euro starts going down, it's gonna create more demand again for dollars again. And which is gonna go down first, the dollar or the euro? Well, I think the euro is gonna go down first. And so if that happens, then it's gonna create more demand for dollars. And the dollar, I think, is going to be the very dead last of the fiat currencies to go down, because that's the empire. That's the most solid part of the foundation of the world's system. Fiat monetary system is the most solid part of the structure. And so the rest will be swept away first. So you're going to see the hyperinflation, you're going to see a demand for dollars because weighed against these other fiat currencies, like the Japanese yen and the Swiss franc and the Great British pound and on, all these other fiat currencies, the dollar's the best one of the bunch. And it's the last to go down. But then on the other hand, too, you got the Fed printing unlimited amounts of dollars, and so they're all really sinking together. All of the fiat currencies. Fiat currencies, right now at this point, the clock is ticking. They're going the way of the Goonie bird. Thank you guys for listening to the show. Like and subscribe. Give me a thumbs up. We'll catch you guys in the next episode. Bye-bye.